With the last 2 days of declines, are we still in an overbought situation, and how do you gauge that?
Yeah, I mean, I think it's hard to say whether that, kind of completely wiped out what we saw in terms of just positive sentiment and just, the market getting super excited about the talk of the Fed going into the end of the year about the potential rate cuts this year. So I think the answer is it's hard to say. I think that, a little bit of the froth came off the market, and I think it's a good time for investors who particularly are looking at the Mag 7 to consider buying on these dips. So whenever I see 1 to 2% pullbacks in some of these stocks that just have so much room to run for various reasons, and that is the Mag 7 in my opinion, I do like to kind of dollar cost average in and just hold it for the longer term and not worry so much about whether or not they move down another 0.5% or so before they rally back up another 10 to 15 before the end of the year.
You seem to like some of these well-liked stocks, Google, Amazon, Microsoft. Tell me why you think these are still places where people ought to be putting their money.
Yeah, so I mean, I think, on a basic level, all of these stocks have strong balance sheets. I think they've sort of, withheld the rate environment 2023. If we go back to 2022, these stocks were absolutely crushed. And I think that last year, the range of returns was anywhere from 25 to 250%. On the Mag 7 plus, and the Nasdaq up about 40% or so for the end of the year. So I think it was a bit of a recovery year, and it was just sort of tapping into the opportunity of what is AI and kind of the creator environment. I think this year is going to be more about quantum computing, supercomputing, machine learning, data mining. I think it's going to be the enablers and the users of AI more than sort of the creators of AI. And so I think you still have a big runway in these stocks. They're the providers of things like the cloud, the quantum supercomputers that can actually make AI a reality. They're the providers of the technology that other companies are going to use to employ AI in their services, whether it's healthcare or factories and things like this. So I do think that there's a tangible reason for them to run. I think some of the names like Google, you're looking at a 20 times forward multiple, a little bit lower than the market. Microsoft has a pretty low beta. And again, these are companies that are just quality companies. Some of them look like value stocks.
Hello there, savvy investor. You might be wondering if now is the right time to consider buying the dips in Magnificent 7 stocks. Well, let's dive right into it. The Magnificent 7 refers to 7 high-performing stocks that have been showing promise in the market. As for buying the dips, this is a strategy where investors purchase an asset when its price has dropped, with the expectation that it will rise again, making it a potentially profitable move. Welcome to Magnificent 7 Investing, where we make investing simple and accessible for everyone. So why consider buying the dips now? Let's delve into it. Imagine standing on the edge of a vast ocean, the waves rolling in and out. The ebb and flow of the market is much like this ocean, presenting opportunities at every turn. We are at such a juncture where the market is retreating, creating what we call dips. These dips, my friends, aren't times of despair but opportunities waiting to be seized. You see, when quality stocks are momentarily undervalued, it's like a grand sale on Wall Street. It's during these times that the shrewd investor steps in, buying up valuable assets at a bargain. But why now, you ask? Well, as the astute Defiance ETF's CEO Jablonski suggests, the current market conditions are ripe for buying the dips. The Magnificent 7 stocks, despite their inherent strength and potential, are experiencing a temporary slump. This could be due to a variety of factors, from market volatility to short-term investor sentiment. However, these are the times when investors can benefit from the market's short-sightedness. By buying the dips, they can acquire quality stocks at a lower price, setting the stage for potential future gains when the market rebounds. It's important to remember that this isn't a call to throw caution to the wind. It's about spotting opportunities and making informed decisions. We're not advocating for reckless risk-taking, but rather smart, calculated moves. Remember, timing is key in investing. Now that we know why it's a good time, how do we go about buying the dips? First, it's crucial to identify the right stocks. Look for companies with solid fundamentals. These are companies with strong balance sheets, good management, and a business model that's built to weather economic storms. You want to invest in businesses that not only survive downturns but thrive in them. Once you've identified potential stocks, it's time to monitor their price. The goal is to buy these stocks when they're undervalued, or, in other words, when they're on a dip. This doesn't mean you should buy any stock that has seen a price drop. Remember, A dip in an otherwise upward trend is different from a continual downward spiral. Timing the market perfectly is impossible. Instead of trying to buy at the absolute bottom, aim for buying when the price is lower than its intrinsic value. This is where research and patience come into play. Keep an eye on the market, the sector, and the specific company news. Finally, don't rush in all at once. Consider a strategy called dollar cost averaging. Essentially, instead of investing all your money at once, you invest a fixed amount regularly, regardless of the stock price. This strategy reduces the risk of investing a large amount in a single investment at the wrong time. Remember, buying the dips isn't about quick wins. It's a long-term strategy that requires patience, discipline, and a solid understanding of the companies you're investing in. With the right strategy, buying the dips can lead to great returns. Investing wisely is all about understanding the market and making informed decisions. Today, we've delved into the strategy of buying the dips, particularly focusing on the Magnificent 7 stocks. It's a strategy that can potentially yield impressive returns during market downturns. But as with any investment approach, it's not without its risks. We've discussed why now might be an opportune time to consider this strategy. Market conditions, economic indicators, and the overall performance of the Magnificent 7 stocks have all suggested that the current scenario could be ripe for investors willing to take the plunge. But remember, the key to successful investing lies in conducting your own research, understanding your risk tolerance, and making decisions that align with your long-term financial goals. Whether you're a seasoned investor or a newbie just dipping your toes into the investment pool, it's crucial to stay informed and make wise decisions, and this is where we come in. Here at Magnificent 7 Investing, we're committed to providing you with the insights, tips, and strategies you need to navigate the ever-changing investment landscape. So, whether you're considering buying the dips or exploring other investment avenues, we're here to guide you every step of the way. What are your thoughts on buying the dips? Do you think now is a good time? Comment below and don't forget to like and subscribe to Magnificent 7 Investing for more investing tips and insights.